Push up, push up, push up, push up, push up, push up. There we go. Push up, push up. Closing your top, closing your top. There you go. There we go. Good push. Let's push out. Come on, let's push out. Finish it up, push up. There we go, push up. We want to break out of the sweet spot zone right here. There we go. Want to push out the zone and hold it. Want this counter to close on this top. Good close. Great push here. Coming right out of our sweet spot zone. Close on the top. That'd be wonderful. Great close. We're holding. Oh, what we're trying to hold. We just got 30 seconds to hold on out here. 28 seconds. Hold on. We want to stay outside of the sweet spot zone. So we want this breakout candle to hold outside the zone. We want it to hold. Yep, good hold. Good bounce. All right, hold it. Let's count this boy down. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Say it with me.
Easy money.
Okay, so we are breaking higher. So we now got another low, push up higher low with a nice strong candle. Breaking out. We're still attempting to test here, here, here. So good candle here. See how it closes. All right, we're gonna take it. Pretty good entry. Let's see if we can ride this thing up to break through here. Good push. Good push on that first candle. Okay, so we got 28 seconds to hold on. This is working just like we thought. Low, push up, high, low, beautiful candle. You can see that I posted this in the community too. Yeah, when we were still down here in the sweet spot. So for those in the community, this should be a great grab here. Great trade. We need to go long. Let's count it down. 8, 7, 6, 5, 4, 3, 2, 1. Say it with me.
Easy money.
Hey guys, how's it going? JD here. So I think it's pretty common knowledge that history repeats itself, right? You've heard that phrase before. You know, it's the reason why we study history, so we can learn, you know, from mistakes of the past, because again, there's nothing new under the sun, and history tends to repeat itself. And a lot of people don't look at that when you're day trading, right? Because the market does nothing but repeat itself. I mean, financial markets, man, all they do is repeat what they've done before, you know, and you may not be looking at it that way. You know, if you're new to this channel, you may have never heard the term market cycle, which you probably have, but not in terms of financial markets. See, the financial markets have a distinct cycle, okay? I say it each and every video, right? So why change anything now? The market moves like this. You're gonna get a trend break, and a retest to a high low, depending on whether we was trending down or trending up. That's the cycle, all right? Just like you're gonna get a seasonal cycle, you're gonna get summer, spring, fall, winter, then you're gonna get summer, spring, fall, winter. I mean, just like a seasonal cycle, the market has a cycle. Typically, if you trend up, trend break, retest to new highs, after that, it's gonna come down and do the same thing. Or it may range for a minute first and then trend down, trend break, retest. But it's going to follow pretty much the same pattern, you know. Or it could trend up, trend break, retest, range for a while, and then start another trend up, trend break, retest, you know. But the thing about it is this. If you study the history, you have a much better opportunity to know what's possible next, okay? If you study and look at the financial chart history, right? Man, reading price charts that's trading. That's knowing which direction to go. Is there anything else more important than trading? Let's just think about it. You can know everything there is to know about divergence. You can know everything there is to know about confluence. You can know everything there is to know about signal candles. You can know everything there is to know about setups. You can know everything there is to know about pivot points. You can know everything there is to know about volume trading. You can know everything there is to know about whatever you want to come up with. If you can't pick the direction, right? If you cannot pick the correct direction, nothing else matters, right? Nothing else matters if you don't know when to go long or when to go short. And what I'm trying to tell you in this video is that the market actually tells you what is most probable to do next because it moves in a very predictable cycle, which I just explained. And so when you know that, all right, we've had a trend and a trend break and a retest a new high, when you can read a price chart to that level where you know this market cycle is complete, I know that we should start a new cycle coming down, right? When you can do that, then you can use the history to predict the future. And and then you can wait for confirmation, right? Let me give you a full example. Say we're trending up. You've had a trend up, a trend break, a retest to new high, okay? At that point, you can say that market cycle is over. I'm expecting prices to turn. But you don't have to take a trade right then, right? But you already have the expectation because of the market history that market cycle is over. We're probably going to start heading down, right? Then you see a trend down all of a sudden. You're using the 21 EMA. You're following the EMA. Prices are staying under the 21 EMA. So you got a clear leg down. So guess what? At this point, you now can say, all right, enough price action has printed to confirm my belief that prices are going to turn and then make two legs down, right? So then you get that first leg and then it starts to retrace. Now you got more information that, okay, now I know where we are exactly in the market cycle, right? I used history to tell me what was very possible to happen next. And now I waited, let more price action play out. It's doing exactly what I thought is heading down. Now it's pulling back, probably going to pull back 50, 60% or so before it starts to make a second leg down, trend break, retest. So at that point, you can confidently trade the retest of that down market cycle because you got all that history, because you read the history and then confirmed by letting prices prove themselves. All right, you did a lot of waiting, you did a lot of reading, you did a lot of waiting, right? You made one educated guess that is working out. So now you take that trade, right? Once you get back to the sweet spot, you take that trade with confidence because you used the history, right, to know where you are. And in the markets, history repeats themselves. Okay, the market repeats itself over and over and over again. It's just trend up, trend break, retest. Trend down, trend break, retest. Trend up, trend break, retest. It just happens over and over and over. It's the exact same pattern. It's happening in all markets, futures, forex, stocks. It doesn't matter the market. It's happening it's happening anywhere there's a price chart, right? And it just repeats. History just repeats. You know how sometimes if you draw a range and it bounces here, goes up, comes back, bounces here, goes up, comes back. That's history repeating itself. So if you've already seen if you've already seen two bounces at this price level, right? There's a high chance that history will repeat itself and you'll get another bounce. Now, yeah, you can pick it wrong, get it break out. That happens, right? That happens. Nothing's 100%. But if you got a nice strong range and you've had a couple bounces there, history could repeat itself and bounce one more time. The market loves to repeat itself. All right, it loves to repeat itself because there's only three things the market can do. Right, again, as a recap, this is entry level trading. The market generally moves in three directions. You're trending up, direction number one. You're trending down, direction number two, or you're moving sideways in a range, direction number three. So since the market can only do three things, right? When you're looking at a price chart, it looks very random. You know, the candles look very random there because they're different sizes. Some of them have stems, some of them are large, some of them are small, some of them are dojis. So it doesn't look like there's any rhyme or reason to it. But when you back out and you understand the market cycle, you can see why the market can only go up, down, or sideways. So it repeats that up, down, or sideways over and over again. It can only go up, down, or sideways. It doesn't have a lot of options. The market doesn't have a lot of options. It only can move basically in those three ways. So it has to repeat patterns over and over and over again, okay? And then once you get good at reading the history, finding out where you are in the market cycle, then you'll start to see the setups that it repeats over and over again, okay? Because once you get a trend down, trend break, when that retest comes, then it's making a second entry short, or it's making a second entry long, or it's making a higher low, or it's making a lower high. Okay, this is why these price action setups that I teach happen over and over and over again, because the market just repeats over and over and over again. And once you learn how to read a price chart, because again, there's nothing more important than picking the direction. All right, there's nothing more important. If you just know the right direction, you don't even got to pick the best entry candle. There's nothing more important than knowing I should be going long today. Right, I should be going short today. There's nothing more important than that. So when you learn how to read a price chart, use the history to know where you are in the market cycle. Understand that this market is going to repeat itself. It's going to do the same thing over and over again. Then you can start to pick the right direction. Then you can begin to increase on the sudden, because the market repeats, okay? History, market, financial market data, history repeats itself all the time. History repeats. So learn how to read a price chart, get your studying on. Use the 21. I use the 21 exponential moving average so that I can see the trend up, see the break, see the retest. Okay, we're coming down, see the downtrend, see the break, see the retest. The 21 EMA is your best friend. It shows you the market cycle. It's the only indicator you need. Once you start reading price charts using the 21 EMA, then you can just scroll back a little bit, check out the history, and boom, then you can trade. All right, so we're gonna go to the charts and I'm gonna show you this exactly, you know, how I was able to take a trade the other day just because I knew where we were in the market cycle, and it makes trading so much easier. All right, so let's go to the charts.
Looking for profitable trade ideas in the Forex market? Want to learn a unique strategy based on price action and Fibonacci retracement zones? Join our trading community now for just $10 a month and receive trade ideas and binary options chart markups straight to your inbox.
All right, guys, so we're on the chart. So this is the S&P futures ES. So this is just a prime example. So this main area here is yesterday's price action, all right? And then past this dotted line is today. But let me show you though. You clearly see the market cycle. Oh, you know what? Let me get my tool up so I can draw it a little simpler. Okay. So this here, people, this is a massive trend down. I mean, it was massive. This is, if I believe it was a 68 point drop, just massive trend down, right? But then you got the trend back up. This is a trend break. This is a clear break of this downtrend. And not only did you get a trend break, you got the classic two legs back, trend up, Look at this, trend break, retest a new high. So this was a small retracement market cycle inside of a larger market cycle. Okay, which is normal. That's actually normal price action. So we got the trend down. Here's the trend break, and then bam, right here, the retest to new lows. This was the low. This is the new low. Perfect market cycle. Just perfect market cycle. Now, it took a whole day for this to happen, just about. But that's a perfect market cycle. So at this point, this is our history. The history is that we've had a perfect market cycle to the short side, you know. So what we have to do is wait for evidence now that we're going to get the same type of cycle going up. And if we come over here, what do we get today? Evidence that the market is going up. So then after that market cycle is over, we can look for a new market cycle. Here it is. Trend up. Very small break because this thing was so strong. I mean, this thing ended up running 80 points. I think 80 points, 74 points. I know. But this is retest a new high. Trend up, trend break, retest new high. Huge market cycle. Huge cycle up. But you could take advantage of this run here because you understood the history of what happened yesterday. You knew that this big market cycle was over. We've had a trend down, trend break, retest. So I know we should be heading up. And since I knew that, I was able to grab my 1,000, or excuse me, 10 points right here. After when we was in this range, we broke out. I took this trade and boom, I was off to the races. You know, now I got too close and only got 10 points. Could have got 80, but we're gonna let that go. We're not gonna dwell on that. But yeah, boom. And so because of knowing the history and just following the market cycle, just following the 21 EMA, reading the price chart, I mean, this drop here was a massive retest, but boom, retest to a new low. And then after that, we're off to the races. So you can use the market cycle and you can use price action history to know what to do next. I mean, once we hit this new low, and I just happen to have this support line here from, I don't know, weeks ago, and it couldn't get through it again, you know, it bounced back here at some point, or I wouldn't have had this line here. So again, history is repeating itself, and it bounced here one more time for just, I mean, wow, humongous run up. I mean, what a run. What a run. Yeah, so today I saw it drop 68 points in a market cycle. Today I saw it go up, probably, I think it's running right now, so I seen it go up like 80 something points in a market cycle. And so understanding that markets repeat themselves, understanding that history repeats itself will allow you to pick the direction. Okay, so that's it for this one. I mean, I show the market cycle so much. I mean, if you've been watching, I hope you have it by now. If you're new, let me draw it. Let me draw it again for you. The market cycle is a trend up, trend break, retest a new high. Okay. The other thing is you're going to get two legs. This is one leg. This is two legs. Also, many times that second leg is going to be the same distance as the first leg, or could possibly be longer. Sometimes it comes up short too, but a lot of times it'll almost be to the tick, to the exact price, to the exact length, or if it's a strong move, it'll just keep going. All right, that's the market cycle, and it happens the same way going down. You get a trend down, trend break, retest the new low. All right. Also, let me say, sometimes this move up is two legs up. It's a little market cycle like this, like it happened back there I showed earlier. The retracement is two legs back. Man, that now when you get that, that's perfect market cycle. When it looks, let me start over. Man, when it looks like this, where you get a trend down, and then it's like this, pull back, two legs back up, and this is like the 50% zone, and then you get this action. That's about perfect. That there is a market cycle, people. That's a complete market cycle. Let me draw going long. Just since get our draw on a little bit here. Yeah, when you see one of these, you heading up, and then you get that 2 legs back, market cycle look like that, and it's about 50%, and then you get that there, people, that there, perfect complete market cycle. That's a perfect complete market cycle. And so once you see these 2 legs back, especially if it's sitting in the 50% zone, now you're looking for price action setups. Now you're looking for the second entry long. Now you're looking for the higher low. All right. Now you're looking for the rally base rally. Now you're looking for all the price action setups that's going to happen in a beautiful second leg up retracement. All right. So that's it for this one. Hope you get it. Hope you see it. It happens all the time. History repeats itself. The market can only do through 3 things. It can only trend up, trend down, or go into a range. And so once you understand that and see it, use the history to tell you what's most probable to happen next, because you have to get good at picking the direction of the market. All right, so I'm gonna sign off with that. Please, this is a great time to like, share, and subscribe. I greatly appreciate all the comments. I greatly appreciate all the likes. All right, my name is JD, and as always, I wish you increase on the sudden. Hey guys, how's it going? JD here. So we got a futures runner going, and you know, the market opened up, it shot up here, you know, nice strong leg up, then it went into this range, and so the market moves in 2s. And so typically if you get one leg, a nice leg, you'll get another one. So I measured out a leg here, so this is my target. I'll try to get out a little bit before the target, and so we entered at say 54.6750, and we're trying to get to 54.90.75. So 90.75 minus 67.50, that's 23.25. So we're trying to get 23 points on this one. At 2 contracts, that's $2,300. We currently have 10 points locked in, so another $1,000 day is in the bag for sure. Right, so these $1,000 days in futures is where it's at. So we'll see if we get there. Hopefully we can get there, but if we don't get there, $1,000 day in the bag. Okay, so that boy came back. So, you know, pull back. We did make the target, but another $1,000 day. Yahoo, I thank you. I'll take it. All right. Keep going. This futures is nice. Futures is nice. $1,000 days. Hey, thanks for watching all the way to the end. I can truly call you my friend. I appreciate it. If you want to keep learning, check this video out right here.